Hey everybody, it is Chuck Barone on Monday, September the 23rd, 2024. Glad to be here on a Monday. A happy day, weekend done, a good weekend. I hope everybody else had a very nice time and got a little R&R in and spent some time with people they care about. And now it's back to business, man. Crazy week, crazy times, crazy world, and sadly, getting crazier. Holy shit. Anyway, before I get rolling today, let me take a half a second. Welcome everybody to the show. As always, guys, thank you for your support. Our numbers are shrinking. We got a few loyal ones here. I think we'll be able to hang in there till we can get those numbers rebuilt a little bit. I appreciate everybody being here with me today. All right, let's talk about markets. Oh, guys, did you see these markets today? I think now the market's kind of having a little bit of a mind of their own. The Fed cut rates, that blasted things off nicely, and now the speculation is what's going to happen in November. See, by the time the Fed meets in November, I think their announced day is the 7th. It'll be a couple of days past the election. So they won't have an angry Donald Trump. They won't have anything to hold them back. And now the market is betting. Now the traders, the bond traders in this freaking market, are betting that either the November or December, they're betting there'll be cuts at both meetings, and they're betting one of them will be a half point cut. I remember back in the day they were saying the Fed's going to try to chop off one whole point this by the end of this year, and I was like, they're going to have a half point cut somewhere. I couldn't believe they were going to do that. They already did. Now they're coming back with another half a point cut plus another quarter point cut. So these guys now, the market figuring that, I don't know, maybe the market's seeing something I'm not. Because the only reason the Fed would go cutting that heavily is if they saw some type of economic distress. And granted, commercial real estate, there's some sectors in our economy that are really in trouble. But I don't know if an extra quarter point cut's going to really make a difference for them. And I think the market might be just getting in front of itself a little bit too much now. Obviously, the Fed is going to go looking for the neutral rate, a rate that neither pushes the economy forward or stalls it out. And they're guessing right now that rate is roughly around 3% on the overnight. So that tells us we're not going to see the Fed going back to the zero rates we had for so long, especially during and after the pandemic, until they started hiking. So get ready for a little bit different world we're living in, guys. I don't think we're going back down to zero rates. We're probably not going to see 3% mortgage rates coming, and it is what it is. So the markets today, this week is kind of a weird week the way it's setting up, because Monday and Tuesday are very quiet data days. The data doesn't really start coming in until Wednesday, and even Wednesday is kind of a quiet day. Thursday and Friday are the days the big news is going to come in, and those are the days that are really going to move these markets. I think we'll get a little bit of this neutral, just kind of hanging out, waiting till Thursday, Friday roll around. So today the market's up. Dow Jones climbs 61 points, 42,124 on the Dow. The NASDAQ up 25 points, 17,974. And the S&P 500 up 16 points, 5,718, a new record for the S&P 500. So apparently the markets aren't really concerned with recession. You wouldn't be having a broader market like the S&P cracking a new record level if they were really worried about recession. You know how the market is so quick to price bad news in. So it looks like the coast is clear for right now, guys. The mythical is landing this soft landing, this mythical soft landing is going to be the equivalent of seeing Bigfoot, right? I mean, it doesn't happen. So it's going to be a fascinating time, man. We got a really big end of this fourth quarter of this year with the election and everything else going on is going to be a barn burner, guys. The bond market kind of mixed today. You have the 10-year actually being bought up, falling. Yield falls 1 basis point, so it's not much movement. 3.74% on the 10-year. The 2-year sells off just, I think they were selling twos and buying tens today because it sold off just enough to make it go up 1 basis point. So the 10-year down 1 bip, the 2-year up 1 bip, the 2-year now at 3.59%. The inversion, the reversion, I guess, or the normal yield rate now 15 basis points spread between the 2 and the 10, and looks like that's starting to normalize a little bit. The dollar today surprisingly rallies up 17 basis points, 100.91 on the index. I'm really surprised, guys. I really am. I thought the dollar would be below 100 already, and I'm a strong dollar guy, so don't get me wrong. I am not disappointed. I'm just surprised at the resilience of the dollar. I think it's more a reflection of how weak the competing currencies are or their economies. Plus, we have our rates are a little bit higher than everybody else's, and that's probably helping the dollar a little bit too. Precious metals today, kind of a weird mixed day for precious metals. Gold rallies up $4.90, $2,627.30, man, $2,600 for an ounce of gold. Frickin' incredible number. Great job, gold. Silver, on the other hand, falls 37 cents. But still holding the number, $30.71 for an ounce of silver. So it's still continuing the consolidation above $30. I hope that will continue and get stronger until silver can take off on the next up leg. Oil today, oil falls 48 cents. Oil prices tanking, $70.52 for a barrel of West Texas Intermediate, exactly where we expect it to be. And Bitcoin to finish the markets up, rallies today, but just up $83, which in Bitcoin world is basically no change. 63,303 for Bitcoin. Looking at the chat here, Kevin, the government running a $2 trillion a year deficit, interest payments over $1 trillion. That is very, very, very true. And the crazy part about that is they're going to have to borrow money to pay the interest on the money they've already borrowed. So I don't know, again, you guys know me. I have been a little bit of an inflation hawk, feeling like they're making some mistakes in this fight. I've been wrong, though. Powell's had it his way so far. Now let's see if the moves they're making now will help or hurt. Because I got to say, it's probably 50-50 either way. When you're running the kind of budget deficits we are, spending the kind of money we don't have to spend, and we're spending it anyway, man, that is massively inflationary. Now, the Fed is reducing M2, and that's a big deal. First time since the Great Depression, monetary supply is actually falling, which is, I got to say, is hard to believe, right? But the Fed doing what they got to do. So we'll see now. This last quarter, like I said, is going to be an amazing one. We'll see how it all finishes up. All right, like I do every week, let's talk about data we're going to get this week. Today, quiet day, nothing happening. Tomorrow, we'll get a very small short sellers report. Short sellers in the market, always interesting to people to see what kind of negative bias there is in the market. Wednesday, we'll start the data, but not much. We'll get mortgage bankers index. We'll get new home sales, which are expected to be down. So a little bit of real estate data on Wednesday. Thursday, we'll start the big data. We'll get durable goods, which is expected to be down. We'll get jobless claims, which are expected to be 223, which is up from 219K last week. And we'll also get third quarter GDP numbers, which are expected to come in at 2.9% for the third quarter. So that's going to be a big day of data. And then on Friday, the real big day, right? We will get the Fed's preferred gauge of inflation, the PCE report. We will get personal spending report, which is expected to be up. We will get personal income, which is also expected to be up. And we will get the University of Michigan survey, which is really a good deal. I've been learning more and more about this survey. As I've been spending time researching it, it gives me a lot of extra data to talk about with you guys to kind of give you a little bit more perspective on where this market's going and how you can benefit from it. All right, let's talk about markets today. Kind of a quiet day, so not a lot to talk about, but traders, this is the big thing I saw today. Traders betting on another big cut in November and that a recession isn't going to happen. So they're already pretty much convinced that Powell has landed this soft landing, and that's been the market's consensus pretty much ever since. Powell has been very good, and he's caught a lot of breaks, guys. I mean, he just has. But every time that the Fed has cut rates by half a point or more since 1987, it has not ushered in, but it's been a recession. So typically when they start to cut, it's a quarter, just to give the market a heads up. They usually, when they start cutting by half, it's because of dire economic situation coming, a recession, or even worse, like in 2008. So this cut that's why the market was so spun about this cut, right? It's crazy times, guys. Conservative analysts, even the conservative analysts of Bank of America, okay, are expecting a half-point cut. They warned that aggressive rate cutting could spark inflation again. Well, at least they're giving us that, right? Now, I ask you this, guys. If inflation is coming down, 2.5 coming down, if the economy is still good, and the Fed has already cut by half a point, tell me logically why the Fed would cut again by half a point. They want to keep reducing rates, that makes sense. But to go half-half and to do it in such a, what would be construed as a hurried or not desperate, but I don't know the right word, but a rash move, right? I don't know if that's going to inspire confidence in the stock market, at least. Now, granted, people that borrow money, businesses that depend on borrowed money for their livelihoods, that they're like real estate, for example. Most people aren't paying cash for houses. So we need to deal with financing, and the financing has been really rough with these rates this high. So as rates start to come down, things are going to start moving, moving even more so. So tell me why we need another half-point cut. I think this is more like traders' wet dream material here, or this is what they want because it's going to make the stock market blast off like crazy. But I'm not so sure that's exactly what would be great news for the economy. It's going to be interesting to watch and see how it all plays out. Interesting article today. You guys can find this. China really, 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 really having some difficulty with their economy right now. Analysts are looking at it and comparing it to Japan's lost decade with deflation because of the way these societies, now they're so much different than ours, as you guys understand and know. Because these societies are so much different, when they get into situations like they've been in, Japan in the 80s and then into the 90s, China over the past 10, 15 years or so, where these economies are advancing, I think they get a little bit out over their skis a little bit, and they think that they just can't make any mistakes. And we saw what happened in Japan, and now we can see the very same thing starting to percolate in China. When we went and had the pandemic, our government put money in people's hands to keep the economy going. This in turn sparked inflation, which kept prices elevated. The Chinese went a different route. They invested, rather than give the money directly to the people, they invested in building buildings, building houses, building buildings. Guess what? No stim like that, no inflation. So China, now worried about everything starting to come down and collapse on them. It's going to be interesting to watch it. I think the U.S. probably will do everything they can do to help that along. I don't think we're going to be China's friend on this. So it'll be fascinating, and we'll report a little more on that as the weeks and months go by. And finally today, guys, just to wrap things up, The homeless population in the United States is continuing to grow out of control. It's going to reach another record number this year in 2024. We broke the record last year, right? 2023, when they tabulated it up, it was the highest year for homelessness ever. Now, they've only started doing homeless numbers since I think around 2005. That's before that homeless were called bums and people didn't do like they do now, right? At this point, they're calculating 653,000 people homeless in the United States. That's an incredible number, guys. I think that homeless population might be, if it was all in one place, and would be the second biggest city in Nevada. I don't know if Reno has 653,000. It would be the biggest city in a lot of the states in the West. It's just, this is a problem we need to come to grips with. And if it's somebody we need to find, out of these 653,000, we need to find the ones, they always say, oh, we would solve it, but they don't want help. They won't take help. They just want to do their drugs, blah, 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 whatever it is. I say bullshit, okay? When you got a number like that, there's going to be a certain percentage of the people in that number that want to get out of homelessness. We need to find the people who want help and give them the help they need. We need to stop with the foreign bullshit, stop with the military bullshit, and start taking care of our own friggin' citizens here, guys. Shocking numbers, man. $653,000, man. The places reporting have all shown higher numbers. So this number, this 653 from last year, is going to be higher, okay? New York City has not reported. A whole bunch of other places, bigger cities, not reported. When those numbers come in, we're going to break the record again for homelessness. It's really sad. In the richest, wealthiest country in the world, to have a homeless population that size is really, really sad. Anyway, guys, that's it for the day. I appreciate everybody being here. I appreciate your support. Please hit the thumbs up on the way out, guys. It changes the algorithm around. Thank you, Miggy and Para and Spam and a few of the other guys on the chat today. We're missing a lot of our regulars on there. We got no David Molly. We got no Attila. We got no Salty. We got no Smoke. A lot of our regulars, I guess, taking Monday off. People got lives. I get that. But anyway, we will be back tomorrow to bring you the news you need. Appreciate everybody's support. Until tomorrow, everybody, take care.